bullish sentiment is once again looking like it's returned to the market. But there's a few on-chain pieces of evidence that suggest that actually the longer term picture is not so bullish. Today, we're going to be going through exactly what those pieces are, why some people have got it wrong, and my plan for the initial part of 2026. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Okay, so first off, we're seeing this chart is being shown around everywhere, right? Whales and exchanges with more than 1,000 Bitcoin balance change in 30 days. And you can see this massive blue tick right here, bang. I mean, it's just like completely ridiculous relative to the rest of the data. It's being shared here, it's being shared here, being shared here. This is basically the same thing, realized cap for new whales, so like the price they bought it at, and being shown here as well, just the new Bitcoin whales are buying at an unprecedented pace. This is absolutely not the case, okay? What this is a bunch of exchanges have consolidated their holdings into a few addresses just for security purposes. It's not as bullish as it looks here, okay? What you've actually got on chain is the reverse, to be honest. It's not anywhere near as bullish. And so what this shows you is the exact same sort of thing, just with exchanges removed. And you can see that actually across 30 days, total whale Bitcoin holdings have gone down across 30 days. So it's nowhere near as bullish. And actually it looks the same for smaller, holders as well. People with 100 to 1,000 Bitcoin have also been month on month in terms of their percentage change, decreasing their holdings. So it's opposite to whales are buying a bunch. And actually you can see that playing out here. This is the Bitcoin apparent demand. So how much demand is there for Bitcoin, right? And this is since all history. And you can see that when it's green, there's a lot of demand, and when it's red, there's nowhere near as much demand. Or actually, there's selling pressure when it's red, and there's buying pressure when it's green. And this has just ticked down into like negative territory. So there's more sell pressure than buy pressure right now. And zoomed in, it looks a bit like this. Okay, so this is in the last year. Look, basically, Bitcoin right now has negative demand on a 30-day rolling period. Not surprising, price has gone down. The market hasn't had that brutal sailor bid for a while because they've been accumulating cash as opposed to Bitcoin. Make of that whatever you will. So I was sort of like, okay, what would it be like if sailor wasn't there? And supposedly based upon this model that Claude built, 13.5% further downside if strategy weren't a buyer. So the downside this is over the course of the last few years since 2022. Basically, this is like sailor's impact by year. And so this is on the apparent demand. Okay, so how much of the demand for Bitcoin was sailor demand? And supposedly, this is how it looks on a chart, right? So in the green bars are actual Bitcoin demand, this same chart here. And the orange bars are how much Bitcoin basically sailor bought during that period. And you can see like, when sailor buys a lot of Bitcoin, he makes up a decent chunk of that on-chain demand. So look at this bar here, massive green bar of demand. Sailor made 75% of that demand. So supposedly, based upon this data, Sailor was making up 75% of the demand for Bitcoin in that period. Basically, this just says, look, Sailor strategy, they have been the marginal buyer for a long time. Does this mean Bitcoin price can't go up until they start buying a bunch more Bitcoin again? Not necessarily, no. But maybe a good time to look for the full market reversal is when they stop accumulating cash and they really start deploying a bunch of money into buying Bitcoin again. And you can see like when Sailor's buying big, there's a lot of Bitcoin demand. And actually when he's buying small, there's actually outflows to Bitcoin. So, and again, just more on-chain data to say, look, things aren't really that bullish on-chain, to be honest. What this is the monthly pace of capital net flow into Bitcoin across 30 days. And what you can see is it turns negative in late December, ending one of the longest uninterrupted periods of positive capital inflow in Bitcoin's history. So this chart here with all the sort of like green underneath it, this is basically saying, look, this is the net flow into Bitcoin during this period. Enormous, and it lasted absolutely ages, but it's just turned negative. And actually, when it turns negative in the past, it doesn't go brutally negative, but it does stay negative for a bit of time, or at least it takes a long time before we start to see those same kinds of inflows. In 2018, it was sort of like trading around this zero line for a while, but it wasn't anywhere near like it was before. And then again, at the end of 2021, there was like a 6-month period here. And then again in the bear markets in 2022, it was quite a long time down there. So to expect this to just turn around, I think is probably, based on history, is not a very good bet to take. And this deceleration in capital inflows has coincided perfectly with long-term holders increasing their loss realization. Okay, so people who've held Bitcoin for a while have been selling at a loss. And this structure of like long-term holders selling is typically reflects growing time-based investor fatigue, which is a common characteristic of extended bearish phases. So look, OnChain doesn't look amazing. It says things are relatively bearish. They have been bearish for a bit. And generally when they get this bearish, it doesn't immediately turn around. Now, if Bitcoin runs to 100K, 110K, these numbers don't exactly suddenly change. Okay, for this on-chain data to suddenly start being very, very different, you actually need a complete reversal. You need Bitcoin to get above 105, 110K and stay there for a little bit. Just getting to 100K won't correct any of this pretty much. And of course, perhaps unsurprisingly, ETF flows have been negative as well. Obviously they're a large portion of the actual total inflows anyway. You could argue that maybe this was just the December tax loss harvesting thing. So on-chain data from Glassnode, this was 2 weeks ago, okay? And we had the short-term cost holder basis at basically 102K, active investor mean at like 88K. And I just want to show you how this has changed in the last 2 weeks. The short-term cost holder basis has come down. So not surprisingly, as price is underneath this level now, we're starting to see the short-term cost holder basis come down. And all this looks like on the chart, right, is that the short-term cost holder basis, which is, we just saw that level like 99, almost 100K, is lining up perfectly with the 50-week moving average. Realized price at the bottom is lining up perfectly with the 200-week moving average. And so we're trading right here, right now, sort of between this true mean and the short-term cost holder basis. But the short-term cost holder basis every week is just sort of trending down, just like the 50-week moving averages. But I think this is going to provide pretty brutal overhead support, to be honest. I really think we test this level much more likely than we break this 81K level. But unless Bitcoin can break above and hold above 107K, this is just a lower high and a macro lower high at that, and we probably should expect further downside. On-chain is saying, look, things don't look great. I know we've seen a few green days in January so far. I know we've seen some real heavy compression in volatility in this kind of region here as well. But my base case is that we retest here, we come down lower. Now, everyone's going to be super bullish here, and probably it's going to be hard to remain bearish when price gets there, but I'm going to try and stay pretty neutral unless Bitcoin breaks above 107K, holds there on, daily time frame, weekly time frame. If it can do that, then I'm just going to completely change my bias. Yes, fine, complete bull mode. But unless that happens, then my base case is that the middle of Q1, we're probably going to see further downside action. However, as I've been saying for a long time, I've actually been relatively bullish in these areas for a trade, because I think it's much more likely we hit 100K than we break below this previous wick low at 81K. And now for some slightly more bullish pieces of news. Look, sentiment is absolutely dead, right? And when sentiment gets this dead, typically it's good. We saw here, sentiment was dead, like fear and greed was completely dead in the water. It worked out here, it worked out here, 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 here. All these were great buying opportunities. Now, it didn't work every single time. These little like exclamation points and these red crosses are when just buying fear didn't work. And you can see that actually, like, when things are bad, when things are really in a bear market, it can stay down for a very, very long time. So just because sentiment is bad right now, it doesn't mean it must immediately reverse. Just think back a month. Everyone said, sentiment is awful, it's not going to get any better. It could only get better. It got worse. Just because things are bad doesn't mean they necessarily need to immediately reverse. But it is worth having that kind of like thought process of, okay, things are bad now. If I zoom out 6 months, 12 months, will I be happy or sad if I get things wrong here? For example, if I buy Bitcoin here, am I going to be brutally upset if it goes to 60K? Not really. I'm just going to be quite happy that it's gone to 60K, and I'll buy some at 60K as well. And again, another thing that just says, look, Bitcoin is good value here, most likely. It doesn't mean it can't go lower. This is the Bitcoin Sharpe price, or the Sharpe ratio. And if you don't know what the Sharpe ratio is, it just sort of like is a way of saying, are the risk adjusted returns for this asset worth it? Because if you're getting bad returns and it's super risky, definitely not. But if you're getting good returns and it's super risky, then actually, it probably is worth it. So what you can see is that every time the Sharpe ratio of Bitcoin has hit -1, they've been absolutely incredible buying opportunities. Maybe it never hits these levels again. Maybe it does, but right now it's trading at a Sharpe ratio of about 0. Again, that's been a good time to buy Bitcoin in the past, but it hasn't mean that it can't go lower. You could have bought it here, it went a bit lower. You could have bought it here, it went lower and it stayed lower. You could have bought it here, it went a bit lower. You could have bought it here, bang, caught the bottom. Could have bought it here, went lower for about a year. Not necessarily a bad time to buy Bitcoin overall, however, it often went lower. And just to sort of like highlight where we are right now, this is the funding heat map for all of crypto across the last 30 days. Taking on positions right now, especially in like Bitcoin, you can be paid to go long. This is a -3% interest rate. So just think about that. You get paid to long Bitcoin. Bitcoin's trading at like $90,000. I mean, imagine going back, 4 years and thinking Bitcoin's going to go 90K and you're going to get paid to long it. It's the equivalent of Bitcoin being, 140, 160K in 4 years and being paid to go long then. Just quickly, guys, I want to tell you about Easy Bitcoin. This segment is sponsored by Easy Bitcoin. They're part of the Easy Group family, and Easy Bitcoin operate a recurring purchase service for Bitcoin. The service functions through scheduled card payments at user-defined intervals. Upon processing payment, the company purchases Bitcoin and transfers it to a user-specified address. The service operates in a non-custodial basis, meaning purchased Bitcoin is sent directly to the user's controlled wallet without being held on the platform. This means users can choose how much they want to DCA, how frequently they want to DCA, and it's never held by Easy Bitcoin. It's always held in the user's own wallet. Easy Bitcoin is not available in the UK, and this information is provided for educational purposes only and does not constitute financial advice or a promotion. Cryptocurrency investments carry significant risks, including total loss of capital. Always do your own research. Thank you so much to Easy Bitcoin for sponsoring this portion of the video. And we've obviously also got a bunch of macro catalysts, arguably should be pushing the economy forward, okay? So this is the PMI, you've probably seen the PMI 100 times, the blue line is the PMI. In these little red boxes, we've got quantitative tightening, so when the Federal Reserve are pulling out money from the economy. What you can see is that, look, during times of QT, the PMI tends to contract, and actually that coincides pretty nicely with pullbacks in Total 3's market cap. This is market cap of Total 3. Everything except Bitcoin, ETH, and stablecoins. When this is pulling back, when the PMI is pulling back, when QT is ongoing, we tend to see a pullback in this group of altcoins. It doesn't mean that when QT ends, though, suddenly we just blast off. Actually, last time QT ended, it still took 440 days before price really broke above that level and rallied on. Again, though, you can see that when the PMI began to contract, Total 3 began to pull back pretty much. Yes, it made one higher high, but for the most part, this would have been a great place to sell, wouldn't it? And QT began. Yes, prices were already pulling back. Anyway, they'd already pulled back quite a lot, to be honest. But during this contraction, we've just seen prices really sort of bleed out until that bear market low. We haven't seen the PMI expand yet. What could make the PMI expand? Well, one interesting leading indicator for the PMI is Chicago. This is Chicago's business barometer, which is Chicago's PMI relative to the PMI of the US. And you can see that with Chicago being the purple one, it tends to kind of lead, right? And the reason Chicago tends to lead is because Chicago's data is released slightly earlier, and it generally signals direction because a lot of the sort of trade in the US kind of goes through Chicago, so they see things show up in sort of orders prior to the rest of the US. And obviously readings of sub 50 mean economic contraction. Companies are literally reporting worse data this month than they were in the previous month. We've got the next reading on January 5th, so on Monday, and we can actually glean a little bit of information from Chicago. So Chicago actually had their latest reading on the 30th of December. It was released, still in contraction. They had a reading of 43.5, so they're still under 50, but they had a big jump, a 7 percentage point increase from the 38 low that they had last month. And this actually was a beating of expectations by 7. So they beat the expectations of the number by 7. And what you have seen in the past is that when Chicago beats expectations, so what the market thinks is going to hit in terms of its PMI number, by 3 points or more, the ISM beats its forecast 70% of the time. The ISM expectations are 48.4, 70% of the time. When Chicago beats by 3 or more, US national PMI also beats, right? So it wouldn't be surprising to see an upside surprise here. And of course, an upside surprise would mean that this PMI here gets above this 50 line, and then maybe we can start to see economic expansion. My base case is not that this happens immediately. It takes a very, very long time for these things to actually come to fruition and end up playing out. But Chicago can help us give an idea of whether or not the US's national PMI is going to be turning around. And again, just this is what Bitcoin looks like against the PMI. Probably seen it 100 times, but when QT ends, it doesn't necessarily mean Bitcoin just necessarily rallies. And when QT ends, again, it doesn't necessarily mean the PMI must immediately turn around. It is a real help though. And actually, QT has now ended. I think the Federal Reserve added a little bit of money to their balance sheet over the last few weeks as well. So this is actually going to be reversing soon, and we're going to start to see more money pushed into the economy. Liquidity is coming back. Again, it's just not something that necessarily gets shown in asset prices immediately, especially if this money isn't filtering its way down through to the people who are really driving, asset prices, crypto prices especially, upwards, who are obviously people who are not just investing passively in, their 401ks. And guys, before I go, I just want to really quickly tell you about today's sponsor, Ledger. Massive shout out to Ledger for sponsoring today's video. Thank you very much to them. If you haven't got a hardware wallet, guys, you need a hardware wallet if you're in crypto. You cannot go around holding all your tokens in some hot wallet just existing on your Chrome account. Get yourself a hardware wallet, put your crypto on it. I mean, honestly, these are also great presents. I mean, we're kind of past Christmas now, but Ledger are giving you $10 of Bitcoin with any purchase. For me, I just get these ones here, the S Plus and the Nano X. These are the ones I use all the time. The Nano X is Bluetooth, very, very convenient. The S Plus is wired, lots less convenient, but you know, super cheap. For $40, you can basically secure your crypto. Guys, please, please, please don't have your crypto sitting just in a hot wallet. It must be secured offline. It's awesome to see markets agreeing. I think this year is going to provide a lot of opportunities. I just think it's not worth getting carried away, getting swept up with uber bullish sentiment, and just having a clear idea of what you want to get out of the year, because just buying things, holding them and praying is obviously not the strategy. Guys, go check out this video here, which says my strategy for not holding a bunch of different tokens and why I think that's the best strategy. And go check out this video here on this token that I think has the potential to be one of 2026's biggest plays. Go check it out here. Otherwise, thank you so much for watching. I shall see you in the next one.